Markets gained for a second straight day, but profit booking towards the fag end of the session trimmed gains. Sensex up over 150 points, shutting shop above 58,200. Nifty up 57 points, ending above 17,300. Metals gleamed in trade today. JSW Steel, Hindalco, Tata Steel, some of the top Nifty gainers. Other blue chips included Coal India and L&T on the upside. On the other hand, Bharti, Airtel, HUL, HDFC, IndusInd Bank, Divi's Labs, some of the top laggards in today's session. With fears of recession looming large, all eyes are on the Indian IT giants who will come out with their quarterly numbers next week. Despite all the talks of slowdown in demand from the US and European countries, analysts expect IT companies to deliver a resilient quarterly performance. My colleague Sakshi Batra joins in with more details.
Well, all eyes will be on the IT sector come Monday as the earnings season for the July to September quarter will kickstart with IT heavyweights reporting their numbers. Now, the IT sector is expected to post resilient Q2 performance, and that's despite all the talks of slowdown in demand from the US and the European countries as well. Infosys, the second largest domestic IT firm by revenues, could actually lead the revenue growth this time and may announce a buyback along with its September quarter results. Also, as per HDFC Securities, the Tier 1 IT companies are expected to deliver sequential growth in the range of 2.4% to 4% on a constant currency basis. It also expects mid-tier companies to continue their outperformance over the laggard peers, with Tata Elxsi, Mindtree, Persistent Systems, all of them expected to lead at above mid-single digit quarter-on-quarter growth this time. Now, in terms of the bottom line, Nirmal Bang sees a sequential growth of 7 to 12% for all the major IT companies. For margins, ICICI Direct sees a margin expansion to begin in the range of 20 to 50 basis points Q-on-Q for the top 4 companies. Now, TCS, the largest IT firm, is expected to report the highest margin expansion among the Tier 1 majors. Now, among the key things that you should watch out for as investors this time, there will be demand and growth commentary also to look out for, the outlook on the impact of macros on the tech spending of some of the biggest clients, because any negativity there may actually further dent the share prices of these companies which are already under pressure. Remember, commentary on the deal win momentum, the supply side annual guidance on the revenue and the margins will also be key to be watched out for. Also, the hiring and the attrition trends will be key, especially in the backdrop of issues like moonlighting and the delay in onboarding of the freshers by some of these companies. Now, some reports also suggest that hiring for major IT companies may slow down in FY24. So, any indications or early indications of that will be important to watch. Now, remember that IT stocks have not really performed well on the street this year. September was the third successive quarter of underperformance for the Nifty IT index vis-a-vis the Nifty index. Now, the question is, will the upcoming results really reboot these stocks again for a buffer-free move on the upside?
Well, just a few days before we find out. Thanks for that, Sakshi.